G'day folks, Jim here from Orchard Forex. It is Monday the 24th of August. The week's starting quietly enough in line with last week's closing levels, and it's going to be a fairly quiet week for data this week, really until Thursday, when the Jackson Hole Central Bankers Symposium, sponsored by the US Fed, will be conducted, albeit remotely this year. This has the potential to be a fairly major volatility event, I think, as the Fed's chairman, Jerome Powell, he's going to be speaking on Thursday, where he's going to outline the findings of the Fed's monetary policy framework review. This has been conducted since 2018, and it's going to outline how the Feds may target inflation in future. So until then, I suspect that most asset classes will remain choppy and sideways this week, while waiting to see what he actually does say in his speech, and whether he hints that the Fed will take decisive action on monetary policy at the next FOMC meeting, and that's due on the 17th and 18th of September. So last Wednesday's FOMC minutes of the July meeting, they hinted that the Fed will announce an updated forward guidance outlook in the near future, but whether this will be timed for the Fed meeting on the 16th and 17th or at a later date remains uncertain at this point in time. So until we get to then, I think it's going to be fairly sideways. But we'll go and have a look at the trend table and then the charts and see if we can glean any information from them. So immediately going to the trend table, as you can see, there's a lot of blue, signalling that there's a lot of uncertainty in the market. The only thing I kind of like is the euros, the 4 hours and the dailies do look a little bit heavy. And likewise, the US dollar index, of which the euro is a big component, they look to be turning a little bit higher. So I'd possibly look to sell the euro on a short squeeze at the moment, not looking for too much. But elsewhere, there's not really much to go on right now. The S&P looks reasonable in the short term, but it's still fairly neutral further out. Can't break to those new highs, although the Nasdaq, of course, is doing very well. Elsewhere, not an awful lot. Gold looks as though it might be corrective for further moves lower, although the greater trend is up at the moment, of course. And on the crosses, there's not an awful lot to go on. Aussie Kiwi may be topping out, but once again, that's within a larger uptrend. So possibly looking to buy dips. We're going to have a look at the charts there in a second. In the meantime, here we have a 4-hour chart of the dollar index, and the momentum indicators do appear to be pointing a little bit stronger. So I think there's a good chance of a little bit of corrective activity, but I think we might go and have another look at that 93.5 level later today or in the next 24 hours, and possibly back up to sort of this high here, so 93.90. I don't think we're going to do anything too much this week, and it should remain choppy, but if anything, the dollar does look a little bit firmer. And if we go further out to the daily charts, they look as though they're picking up some speed on the top side as well. So as I say, as far as the dollar index goes, look to buy dips, and the main idea of mine is I prefer to do it against the euro, so sell euros, as I said earlier, into a short squeeze if we see one. Going ahead now to the euro itself. So here we have a 4-hour chart of the euro. It did get sold off quite heavily on Friday. That was after some poor EU PMIs, some decent US PMIs, and also the housing starts out of the US, which beat expectations. So that saw some strength come into the dollar, sending the euro a bit lower. And I think we are going to possibly come down and test this sort of 117 level at some stage, and possibly even the 23.6% FIBO, which is at sort of 116.75, 116.80, something like that. So on the day, looking to sell it really. If we saw 118.25, I think 118.30, something like that, sell it there with a stop loss above Friday's high, which was at 118.80, 118.83 actually. The indicators are pointing a little bit lower, and the dailies likewise, they look heavy. So as I say, I prefer to be short rather than long. The weekly charts are pointing a bit higher, so all is not lost on the upside for the euro in the medium term. But right now, I kind of think we may have seen a top last week above that 119 level. Dollar yen's doing nothing, it's chopping sideways. We'll leave that one alone. Sterling is a little bit, it's been awfully choppy within quite a wide range, but it may have topped out up here. It remains to be seen, but the daily charts, we've come back to 61.8% of this entire down move, and that's capped it for the time being. The dailies do look a little bit heavy. So pretty much the same as the euro. I'd be looking to sell into strength above sort of 131 with a stop loss above the 61.8% FIBO or above these highs. That's not until 132.68, 70, something like that. So some way off. Don't think we're going there this week. So probably more conservatively look to sell for 131 and a quarter, 131.30. Probably with a stop loss above 131.80 or so. Dollar Swiss leave alone. The Aussie is not doing an awful lot at the moment. It's kind of, well, let's go to a 4-hour chart. It's kind of flattened out here really over the last few days, and the indicators are pretty neutral. So I haven't got much view on the Aussie for the time being. But if the US dollar does start to gain some pace, the daily indicators do look a little bit heavy, and we may come back to test levels towards 71 and possibly a little bit lower. I would be looking to sell Aussie as with last week at sort of 72.20, and looking really to buy it back. 71.30 was support for it at the end of last week. It got down there a couple of times. If it goes through there, then we're at 71 cents and 70.80. But I doubt we're going to see that much of a range between now and Thursday when Powell speaks. The Kiwi is much the same. Kiwi actually looks a little bit more toppish than the Aussie, if anything, although it is pretty choppy. But it's sitting a lot. This is a very long-term trend line here, and it's still sitting above there. We really need to break below this at sort of where's that 64.80. We need to break below that. This trend line goes way back here. So if we can see a break below 64.80, which is roughly where the 100-week moving average comes in as well, along with being 50% pivot of this move down. So that's going to be decent support. I don't think we're going below there. I don't think we're going above the 61.8% level either. And if we do, the 200-week moving average comes in at sort of 68 cents. So that's a long way off at this stage. Moving forward to the stock indices. So here we have a 4-hour chart of the S&P 500. And as you can see, it's sitting here just under this 3,400 level, and I think pretty much that's what's likely to happen early in the week at least. This being the all-time high that we saw back in February. We've been flirting with this now for several trading days, really, unable to break above it. And I don't think there's any real reason why we should until we hear what Powell has to say on Thursday. If he is dovish and the Fed are going to chuck more money at the system, then I suspect we will see the S&P start to shoot higher. But in the meantime, it's possibly a day trade. You could probably sell it at 34.10 and buy it at 33.70 and trade that for a couple of days. But I'm not really interested in that myself. I'd rather look for the longer term trade. The dailies are pretty flat, but the weekly charts remain positive. So I do think we are going to take out this previous all-time high, and the monthlies are also pointing higher. If we go forward to the Nasdaq, actually, that's an interesting chart. I mean, the Nasdaq is just powering ahead. This is a weekly chart, and it is at all-time highs right as we speak now, albeit that the RSIs and the stochastics are showing a bit of bearish divergence, but there's no point standing in front of a moving freight train. So you just go with it, and I think Thursday will be a catalyst for another strong move higher. The Aussie market's not doing an awful lot. The dailies, we're trading around this 6100 level. The 61.8% FIBO level has provided a decent cap. We've got the 200-day moving average sitting right in front of us, and any dips down here are going to run into the rising support of the 100-day moving average. So I don't really think we're going to do very much. The dailies are pretty flat. The weeklies, equally, we're lodged between the 200-week moving average, which is the pink line, and the 100-week moving average, which is the top line. And for the time being, well, at least the first 3 or 4 days this week, I think that's likely to continue. We look at gold. Now, gold is in an uptrend, but the weeklies look as though they're topping out, and the dailies are pointing quite sharply lower. So my view is that while we are in this uptrend, this correction probably has further to run, and we've got good support down here. This sort of It's low last week, 18. Well, but we need to get below 1890 really. There's support here, 1890, 1900, and then back down here towards this 1855, 1860 level, which we saw in that sharp sell-off last week. So the 4-hour indicators not telling us a great deal, but I'd rather be short than long at the moment. As I say, the dailies pointing the way they are. I think any strength, there's probably some people caught long of gold up here, and I think any strength will see decent selling interest. Same applies to silver. The volatility in silver has been huge. I mean, so this is something like a 25% move on the day here, and it's very hard to take a position because the volatility. It's great for the day traders, but not so much for the positional traders like myself. So the dailies here pointing lower once again, and the weeklies are still actually looking quite strong. So we possibly, I think we're probably just going to chop around, to be honest, and use 26, well, this 26.5 level as a pivot for whatever comes forward. So on the downside, support should arrive here. This will 23, 30, 40 level, and on the top side, I'll be very surprised if we really went much above 28.5. That's still quite a wide range, but right for now, given the look of the dailies, I'd rather sell into rallies and be short rather than long. Oil, we won't spend too much time on. It's doing absolutely nothing, sitting below this resistance area. Eventually, as I've said before, I think we could break higher, but at the moment there are a lot better things to trade. And finally, we'll go and have a look at a couple of the crosses. Okay, so here we have an Aussie Kiwi daily chart, and I quite like this in the longer term, or more medium term. But as you can see, it got pretty choppy towards the end or last week. In fact, really, the whole of last week. But it's maintained levels close to 110. The dailies are showing some bearish divergence here on the MACDs, so I'll be a little bit dubious about buying it here. But if we were to make a pullback towards 109, 108.5, then I think it might be worth buying. The dailies, sorry, I beg your pardon, the weeklies look positive, and the monthly charts are not showing us an awful lot. Let's blow that up. Not showing us an awful lot. They may be slightly top side, pointing slightly higher. This, I think, as I pointed out last month, though, this 100-month moving average at just above 110. That's going to prove quite a hurdle to cross, and I would doubt that we're going to do so early in the week. But having said that, I am looking to buy dips, and this long-term sort of trend resistance now turns support here. This white line is we really need a weekly close above this 108.60 level, 108.50, 60 level. As long as we stay above there on a weekly closing basis, then I think we could possibly see another leg of this. So we've got leg 1 correction, leg 2, which in equality terms could take us to 113 eventually. But I think that is some way off at this stage. We'll just have a quick look at the calendar before we finish up. Okay, here with the weekly calendar. Not an awful lot today. For the fact there's very little really today. Tomorrow, Tuesday, the GDP and the IFO. And in the later in the day, we've got some more US housing data. Last Friday's housing data, of course, was very strong, and if we see a follow through from that, then that should be supportive of the US dollar. We got the Case Shiller, the housing price index, and new home sales on Tuesday. Later on, Kiwi, there's nothing on Wednesday really until we get the. We've got the Aussie Capex. That might provide a little bit of volatility, but that will quickly come and go. The US durable goods orders are later on Wednesday, but it's really Thursday when we get the Jackson Hole Symposium, and then we've got in the afternoon we've got the US GDP, and of course we've got Powell speaking at the symposium later in the day as well. So that's where all the focus is going to be. There will be other central bank governors speaking as well. Bank of Canada, I know the Bank of England governor will be speaking. And then this carries on into Friday with further headlines coming from the symposium. And elsewhere, there's not an awful lot on the agenda, apart from the German CPI, and then we've got the PCE figures, but they'll all be lost, I think, in the noise coming out of Jackson Hole. So we'll leave it there for now. As I say, I think most things will be sideways for much of the week. I do like to sell the euro a little bit, but that's about it for today. If I've got any other bright ideas, I'll come back with another video during the week. So until then, good luck with your trading. Talk to you later. Bye.